So in the first video, one of the things that we discussed was the supply-demand pattern formations, and there are four in total, two demand formations and two supply formations. So the first one is a drop-base rally. This is where price drops sharply, then consolidates for a period of time, then rallies. The drop is seen as a sign of selling pressure, while the consolidation is seen as a sign of indecision. The rally is seen as a sign of buying pressure. So it looks like this. You have a drop, base, and then the rally. Drop, base, rally. All right, the second formation that's classified as demand is the rally, base, rally. And this is sort of a continuation pattern. The pattern occurs when the price rallies sharply, then consolidates for a period of time, then rallies further. The rally is seen as a sign of buying pressure, while the consolidation is seen as a sign of indecision. The further rally is seen as a sign of continued buying pressure. So what that looks like is a rally, base, and then rally. So let's put a label on that. Rally, base, rally. Then you have the two supply pattern formation. First one is a drop base drop. The pattern is the opposite of a rally base rally. The price drops sharply, then consolidates for a period of time, and then drops further. The drop is seen as a sign of selling pressure, while the consolidation is seen as a sign of indecision. The further drop is seen as a sign of continued selling pressure. So the pattern looks like this. Drop, base, then the drop. Drop, base, drop. See if I can draw that. There you go. And last but not least, you have the rally base drop. This pattern occurs when the price rallies sharply, then consolidates for a period of time, and then drops. The rally is seen as a sign of buying pressure, while the consolidation is seen as a sign of indecision. Then the drop is seen as a sign of selling pressure. So it looks like this. Rally, base, then drop. Rally, base, drop. So these are the four patterns that we're going to focus on in this video moving forward. So in this video, we want to talk about the four supply and demand pattern formations using line charts. Why line charts? Well, a line chart is a way of visually representing an asset price history using a single continuous line. Line charts usually only plot the closing prices, thus reducing noise from critical times in the trading day, such as the open, the high, and the low prices. Line charts are simplest and may not fully capture patterns or trends. However, we're going to identify supply and demand using line charts, as it's really one of the easiest ways to identify these patterns, as I discovered during my journey. So we're going to look at Apple first. That's one of the main stocks traded on Wall Street and probably the most well-known stock. All right. So again, we're going to look for just the four formations. We're not going to worry about whether the line goes through it or not. We'll get into that in other videos. Right now, we're just trying to identify the levels. All right. So this is going all the way back to the 90s, right? So here's one. We have a rally, base, drop in price, right? So if I put a zone there. Obviously it got hit, right? When price came back, came into the zone, and then pulled away. And if we put on our candles, we'll be able to see that, right? Rally in price, base, drop. What happens when price comes back to that level? It drops. All right. Now, here's another one. You have a rallying price, base, and then the rally out, right? Also, you have a rally, base, rally. All right, so we're going to draw two lines. First one's here, right? Rally, base, rally. Second one, rally, base, rally. All right, let's put a line or the candles. All right. So you had a rally in price, base in candles, and the rally out. When price came back, hits, moves higher. The other one we saw, this is the rally, base, rally. When price comes back, comes to the zone, rallies out. Now the reason why price probably breached and closed below, well, this candle penetrated the zone 100%. So there were no more unfilled buy orders. Okay. All right, let's continue. Here's one. Here's another one. So rally, base, rally, rally, base, rally, rally, base, rally, rally, base, rally. So you got several. These are all continuation patterns. Down here is what's called a flip zone. We'll get into that in later videos. Now, price surged from $14 to $23, came back. Let's see if see what happens there. Okay. So you had a rally in price, base in candles, a rally out, price came back, hits it, moves higher. Again, another rally, base, rally, another rally, base, rally, rally, base, rally, right? All you're looking for is explosive moves higher, some consolidation, and another explosive move higher or lower or higher. Either one. All right. You have a rally in price, base in, rally, higher, right? All right. This one appears to not work. You can say this is a rally, base drop. Another one that did not work. Let's look. Oops. All right. So you had the rally, base, rally. This is a rally, base, drop. So these did not work out, right? And again, we're not going to worry ourselves with whether they breached or didn't work out. We'll explain those in later videos. Right now, we're just trying to train our eyes on the four pattern formations. All right. Got a rally, base, rally, base, rally, base, rally. This was a good one. I don't really like these here, but this was a decent one. So rallying price, two basing candles, and the gap higher did not work out, right? I'm glad I left these on because I want to revisit these. So let's okay. I'm gonna leave that one on. I'm gonna leave that one on. This is a rally, base, drop. Okay. Rally, base, rally. This is a rally, base, rally. Now we're getting into the 2020s. Got a rally, base, rally. Not the prettiest. And then you got the rally, base, drop. Now we know Apple's pulling back, right? Due to China banning their iPhones. So this could be an opportunity where price rallies. This will be a flip zone. All right, let's put on the candles. All right, so now this one, hard to see the formation, but this is actually a drop base rally, right? That red candle, drop base rally. And this is a rally base drop. When price comes back, works. When price comes back, works twice, right? Pretty cool. All right, now we're going to stay on Apple. And we're going to go to the daily chart. Maybe go to a weekly chart. Let's see. We get some more. Now, as you go down in time frames, you're going to get more noise, but also means more trading opportunities. I'm just trying to see if we have more trading opportunities. All right, so you can say you have a rally base drop, and we're going to go to we're going to keep that on the monthly, and we're going to go down to the weekly chart. Again, the white zones, that was monthly zones that we did look at. All right, so you got a rally in price, base drop, base drop. So rally, base drop, base drop. So you got two zones here. And we need to change the color. And let's see how these worked out. Not the prettiest, not really a zone I would trade off of, because you don't really have the explosive moves in either direction. I mean, you have this extended range candle, right, where the body is more than 50% of the wicks, But it's very subtle, very subtle. All right, let's continue. All right, now we're starting to get some moves higher. Here's one. Rally, base, rally, base, rally. I like this. Rally, base, rally, base, rally. All right, let's put on the candles. Beautiful formation, rally, base, gap higher, rally, base, rally. Price almost came to the zone, but didn't quite hit it. Got the rally, base, rally, base, rally. Again, price almost came to the zone, but didn't quite hit it. And again, we're going to get into how do you actually draw your zones. Some people draw their zones from the wick like that, which then would it hit it. I like to minimize my risk. So typically I would have drawn my zone like that on the upside, on the top side. Nevertheless, let's continue. So you got a rally, base, rally. This is one. Rally, base, rally. So let's see how that did not work. This also appeared to not have worked out. Let's go to the, put some candles on here. All right, so again, not the best formation. This was pretty good. Rally, one base and candle, and then a rally out. Not bad, not bad at all. Both zones did not work out though, right? Let's continue. This one looks like a little one. Got a drop, base, drop. Right. Again, this is a flip zone. And again, we'll kind of get into that in later videos. I love flip zones. They show that the other side is winning the war, meaning in this case, this was a rally, base and candle rally, right? So the buyers were in control. When price came back down, the sellers pushed price below what was previously a battleground for the buyers, right? Not the greatest zone. Drop, base, drop. Price came back twice and did get a reaction a third time, right? All right, let's continue. Got something here, right? A rally, base, rally. And one of the reasons why you're seeing these continuations is because last 20 years, last 13 years, we've been in a bull market. And overall, the stock market is designed to go up. But you'll see, like when we get to the daily chart, there's going to be a lot of reversal type opportunities, meaning a rally base drop or a drop base drop. All right, let's see if this got hit. That one worked out. Rally, base, rally, price came back. Off to the races. Here's one. Here's another one. Okay, rally, let's just mark these in. I think there's something to the other side of. Obviously, rally, base, rally. All right. And let's draw this all the way down. All right. So let's see how things transpired. So this didn't work, right? Overshot the zone. This didn't work. This didn't work. But this worked out multiple times. All right. All right, let's put back on the lines. I like this here. Now this is 2009 when price was trading at $5. Pretty crazy. Now we're starting to get into the monthly zones that we had drew prior. Let's scroll back. Okay. That's the zone. Here's a zone right here, right? A rally, base, rally. This is a rally, base, rally. And this is nested within a monthly demand level here. Got two more here. Rally, base, rally, rally, base, rally. All right, let's put on the candles. All right, so price never returned. Well, this one didn't work out, right? Price shot through it. Price never came back. This one worked out. Price came back, shoots higher. Coming out of a monthly demand level, which worked. You got two little zones. Can't see that much, but I see it. Little crink in the line. Flip zone. Put on the candles. All right, this one worked. Rally, base, rally, nice. This was good for 4-to-1 reward risk ratio. This one did not work. All right, then you got a rally, base rally. This is a drop base drop. So let's see how these zones panned out or not. Just want to go up. This is a rally base drop. Okay, let's put on the candles. We're looking at 1, 2, and 3. Just because the line chart hit the zone and moved high doesn't mean it worked out, because you're not seeing the in-between action during the day. All right, so you had a rally base island bearish reversal pattern, then a drop in price. You got a reaction, but that was it. This one here, let's put back on the line. This was a drop, base drop, and that was good for 2.5 to 1. And although this one here, I love the formation on the line chart. This was a rally base rally. Depending on where you would have put your stop level, would have worked out or not. Then you had another one, a rally base rally. Could we see that on the line chart? Yeah. but that didn't work out, right? All right, now we're going higher. Got a little head and shoulder here. Shoulder, head, shoulder, drop, base drop. This doesn't look like it worked out. Maybe. Let's see. Okay, so you had a little reaction there. Drop, base drop. So now you're starting to see some of these bearish pattern formations. So this is a drop, base drop. This is a rally, base drop. All right, let's put on the candles. This didn't work out. This did, right? But you drew your zone like that. Then you got a rally, base, rally, nice level formation. Also a flip zone, right? Got the rally, base, rally. Let's see if price pulled back to that level. Yeah. So you have rally, base and candles, rally out, price pulls back, boom. Gotta love it. Here's another one, rally, base, rally. Another one, rally, base, rally higher. It looks like explosive moves higher. Let's see how these pan out or not. Nice. So rally, base, rally. Got the rally, base, rally. This didn't work out, but this did, huh? And twice. Got two little zones here. Right, rally, base, rally. Rally, base, rally. Drop, base, drop. Rally, base, rally. So let's see how this worked out. So zone, zone, and zone. Drop, base, drop, rally, base, rally, drop, base, rally. Rally, base, rally, rally, base, rally. So rally, base, rally, rally, base, rally. Worked out a little bit. This didn't work out. This didn't work out. This is the rally, base, rally. Did work out, depending on where you drew your stop. A rally, base, rally, rally, base, rally, rally, base, rally. So we got three levels in this move higher. Then you have some more continuation patterns, rally, base, rally, rally, base. Two levels on top of each other and a flip zone. All right, let's put on the candles. This worked out, right? Rally, base, rally. Got the reaction. Looks like a 2-to-1 reward to risk ratio. This zone didn't work out, but this zone did. And then it was off to the races. Rally, base, rally. Rally, base, rally. Let's put on the candles. Okay, rally, base, rally. Pulls back. That worked out. Rally, base, rally, base, rally. So two zones. And then you have a rally, base, drop, right? So rally, base, rally. Worked out a little bit. Rally, base, rally. This worked out twice. Then you got the rally, base, drop. This worked out several times. Drop, base, drop, base. So you got two levels on top of each other. Let's kind of finish this. Then you got the rally, base, rally, base, rally. Again, drop, base, rally, base, rally, base. So drop, base, drop, worked out. Drop, base, drop, did not work out. So the upper zone worked out. And in this case here, rally, base, rally, base, rally. This was good for a decent move higher, right? So that was Apple. We did it on the monthly and weekly time frames using the line charts. Let's try everyone else's favorite, Tesla. This time we're going to do it on the daily chart. And again, as you go down on time frames, noise is going to get louder, but so are the opportunities. All right. So you got a rallying price, base and rally, base, rally, base, rally, base. So you got one level, two levels, third level, and these I should really be saying zones, right? Put in the candles. This zone worked out. This zone didn't work out. This zone did not work out. This zone has not been hit yet. Put back on the line chart. Rally, base, drop, base, drop. Here was the level here. Now this is good because this rally, base, rally, and when we broke this base and candle to the downside, the reversal was in. So this was a good level to go short. Versus here, let me show you. You have a rallying price base and rally, but we didn't take out the pivot high, so that's not a good level to take. Here's another example. We have a drop in price base and then a rally. This is the origin of the move higher that took out this pivot high. So this is a nice drop, base drop. All right, so let's look at these two zones here. All right, so those worked out. Rally, base, drop, origin of the move higher that took out the lows. So this was a good level to go short. But it doesn't look like it worked out. Yeah, it didn't work out. And trading's not about being right. It's about putting on the setup that matches your trading plan. Hopefully your trading plan has a trading edge. The profits will take care of themselves. All right, let's continue. This is a nice level, right? Rally, base, rally, takes out the pivot high. May or may not have worked out. Let's see. Yeah, it worked out, right? Rally, base, rally out. I like this one. Drop, base, drop. Let's see if it worked out at all. Yeah, this one worked. Drop, base, drop. So you can see how when you look at it in candle formation, you may not be able to make heads or tails out of it. But if you go to the line chart, kind of clears it up a little bit. Here's another one. But I wouldn't have taken it, right, because this rally out did not take out the pivot high to the left. So I would not have taken that. And price never came back. All right, let's continue. So you have a rally in price, base, and then a drop. And then on the drop, you have a drop, base, drop. Let's see how those did. All right, so this one, you had a reaction, which was good for 2-to-1. This one did not work out. So you're still up on these two trades, 1x. Rally, base, rally. Too much trading here. Got two of them here, rally, base, rally, base, rally. All right, I would say both of them did not work out. All right, so you got lower high, lower low, lower high. You break this, confirmation of the, actually this leg down was confirmation of the downtrend. This is a rally, base, drop. Right, but that didn't work out. And when you put in the candles, Not a level I would have taken. Drop, base, drop. This basing took out the pivot low. So that would have been a zone I would have taken. Depending on, so the zone didn't work out. Eventually did, really, right? All right, so we're entering (2022, 2023), and got a rally, base, rally, reacted, right? Let's look at that on the, so a lot of trading here, not really a zone. And this must be, if I put on the candles, drop, base, drop, price is coming into that level now. Let's go back to the line chart. Drop, base, drop. So there you have it, just an example of how to use line charts when applying supply and demand. As you can see, it is a little easier to recognize the patterns versus candles. However, candles can give you a bit more of the picture. The line charts is just a gross way to identify the levels of interest. Stay tuned for the subsequent videos. Next video is going to be on trends, accumulation areas, distribution areas, and just how price action trades over and over and over again. Thanks for watching. Subscribe. Please like the video.